Good morning. It's Thursday, May 16th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's explosive rally. You've got June gold just below the 2400 level, trading 23.90. Did get over 2400 in the overnight session. July silver did jump over 30 bucks. Now just trading a couple pennies below it. And then you get into copper, aluminum, platinum, palladium, all higher on the session here. Luckily, many of you guys were pre-positioned for this kind of breakout rally. A lot of guys had options on. A lot of guys had futures on. A lot of guys were trimming, adding, things like that. Saw a lot of action. So it gets kind of wild when the FOMO buying and the meme stocks start taking off here. So AMC, GameStop, I think that kind of helped spark that little rally here, although we did have the tailwinds behind us. So looking at the markets here today, S&P 500 jumped to new record highs in the overnight session and again yesterday. It was on signs that inflation is cooling. CPI came in at 3.4% in April year over year and lower than the March 3.5% print. It was enough to spark a broad-based rally as Treasury yields sold off. The dollar index also broke down, and the dollar broke below the 50-day moving average, sparking further liquidation. So our proprietary trend discovery system had shifted from bullish on the dollar to now neutral. So the dollar is going to need to get itself back over the 50-day, back over some critical levels here, and we'll see how that range plays out. So the key level on the S&P 500 today, pocket support 5310 down to 5300. A move back to this level could spark another little rally against that 5300, push it back up to this consolidation range, this 53.35 on up to 40, while a break below the 5300, so we come down to 53.10 to 5300 support. We may bounce from there. We break below the 5300. That's where we could see a washout and a move back down to 52.75. So many of you guys are bearish on the market. That's why I've been covering a little bit more on the S&P 500. And I find right now kind of the way to play, if you're going to play the downside, I think is more looking at put options. Put options are a calculated risk way for traders to position for a correction or in any particular direction are out there. Remember, they have highly liquid micro S&P put options, so that could be a more inexpensive way or a more customized approach for your portfolio sizing if you're trying to hedge your equity portfolio. So today we're going to see the initial claims data come out, where last week it came out at 231,000. You'll remember that was significantly higher than the 215,000. And then just the Friday before that, we saw the 175,000 jobs created, where we were expecting 200 and about 75,000. Really, 275,000 came in 100,000 less. And the non-farm payroll has been printing like 3.25 and things like that all throughout the year. So the labor market is very important, is what I'm trying to get to you. So the pivot point that I'm thinking on this initial claims is 220,000. You get a number above that level, I think we're going to see another broad-based rally in basically everything, because they'll pull in those rate cut expectations a little bit farther. Who knows? Maybe June comes on a table. Maybe September prices in a 50 basis point cut. So 220,000 is your pivot point. We come in at 215,000. I think that we see another wave of kind of profit taken and markets kind of take a small breather here today, so don't get too alarmed here. Now, crude oil, the chart pattern continues to be in a sideways action. Many of you guys have on December, March, June. We were playing a lot of these geopolitical risks and things like that. Seems like a lot of that's kind of come out of the headlines, but remember, it's always calmest before the storm, so who knows? Things could heat up again. But really, $76.50 end of July on the downside, $78 on the upside. That's this range that we're chopping around right now. A break above $79.30 could spark a wave up to $80, where a break below $76.90 leaves a move down to about 75.60. So, just keep an eye on that range here. So the one thing that people have been really hitting me on is copper. Year to date up 25%. And they want to know why copper's going up. And it's really this push for increased electrical power because of the green energy revolution. I don't care what you think politically about the green energy thing. We got to deal with the market we're in, not the market that we want. So rising EV vehicle demand, advancements in AI. If all of a sudden these computers are doing a lot more work in the background, it's going to really stress that electrical grid there. So, and it's an out-of-date electrical grid. So this combination kind of pushes the demand for copper, silver, and other metallic metals higher for the first time in a decade. That's why all of a sudden platinum is at $1,086. And it just seems like 3, 4, 5 weeks ago, we were fighting that thing around $900 and just trying to chip away at as much as we can. So this also comes at a time when governments, not only in the US, but South America and other areas where they're producing copper and silver and platinum, they've got increased regulations on these mines. So these guys got to jump through all kinds of hoops to get more demand out to try and fulfill the increasing demand that's out there. And that's why we have sustainable bull markets, in my opinion, in many of these different commodities. And I think a commodity super cycle is underway. So you got any questions? Didn't really touch base on the gold silver market. I saw a lot of guys trimming it off. I saw a lot of guys that have, August call spreads on. They've got July call options out, right? They've got the futures on right now. They know what to do. The trades are in their hands. The prudent thing, in my opinion, increase your stops if you got in at low levels here. So look at some lines in the sand. Remember, we were in a consolidation range in the gold market. 2300, 2350. We broke above it. Now if we come down, we break below 2350, we're probably going to go in that consolidation range. So you want to ratchet up, those stops, tighten things up, 2350, in my opinion. On the silver market, like I said, you guys know what to do here. You're up a few bucks on it, protect a couple of those dollars. Just have something out there. Have something. And unfortunately, I'm going to see a lot of people ride this train all the way up and ride that train all the way down. So it is what it is. It's just the nature of the beast. Gold goes to 5,000. They think it's going to 10,000. Silver goes to 35. They think it's going to 350. So whatever. All right. You got any questions? Give me a call. 312-858-7303. I'll be on the Schwab Network at 7:06 a.m. So in about 45 minutes. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.